Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Melissa Bouchillon, and she's the managing partner of Soundview Wealth Advisors. Welcome, Melissa.
Thank you. Thanks, Gary. I'm happy to be here.
So, Melissa, give us your backstory. What did you do before you got into wealth management, and what made you decide to go that route?
Well, Gary, I guess like many people, it's not, a straight line in. I didn't wake up and I was born and decided I wanted to be a financial advisor and a financial planner. I really started, if we kind of went back to kind of the college days, taking business classes, and I was a psychology major. And while I was in college, I was working with a child with autism, and I really loved that. So I ended up getting my master's in education and not really following the business track at all for the first few years. Once I got out of school, I taught every special education to regular ed to gifted children, and I absolutely loved it. But there was this turning point where I decided if I'm going to be a mom and if I want to kind of have children one day, I don't know that I want to stay in education for the next 30 years. So what else could I do, and what else might I be good at? And that's when I started to explore, and I realized that if I could combine the education background with the psychology piece, along with the business and the finance aspect, I might actually make a good financial advisor. And so I have been doing this for 21 years now.
So being that's a good period of time that you've done this. What is it that inspires you every day to get up and continue doing this?
Well, I love helping people. I've always loved helping people and making a difference. And if you think about it, in our society, we are taught not to talk about money, right? And if you think about most of the people that you go to ask questions about money, they're trying to sell you something. And so I really believe that after somebody's health, their family, their faith, their finances really allow them to do the things they want to do and help the people they want to help and drive the impact or work on the passion project, as you always say, that really drives them and motivates them. And so having that true trusted advisor that's not there to sell you something, but can help you really look at all the different aspects of your financial life and connect what you're doing from an estate planning perspective. What do you need to do about taxes? What should I be doing to manage my day-to-day cash flow? Really connecting all those pieces, having that trusted advisor is key. And so I love being that for people. And so that's what gets me up every morning and makes me really excited.
That's great. What at Soundview, what are your guys' core values?
Client first, client first, client first. We are fiduciaries. We must, really kind of figure out what a client's goals and objectives are, what they're trying to accomplish, and help them navigate that in the best way possible.
So in doing that, obviously you've seen a lot of people make mistakes and stuff before they get to you guys. What are some of the big mistakes that you're seeing people make?
One, and this is, I would say, is one big one, is not having a cohesive plan, right? Everybody has their accountant or their tax person. They may or may not have a will. It's typically 20 years old. They get it when they first get married or when they have their first child. They've got their insurance agent. They're saving money and they're putting it away, not necessarily spending time thinking about how they're allocating to their retirement plan. So there's really no connection between all those pieces. And what we do matters. Little things matter. Making sure our assets are allocated appropriately in the retirement plan is important. Making sure that we're aware of where we are from a tax perspective and your tax person is speaking to your investment advisor is critical. We could do a really good job growing somebody's portfolio, but if we don't have the right estate plan in place, their assets may not go where they want them to or pass in the most tax efficient manner. Someone can do a really great job building a phenomenal business, but not have a plan for the day when they may want to retire. Who's going to run that business? If they can sell that business, who are they going to sell it to? And we always plan for what I like to call sort of that worst case scenario of say things don't work out, right? It's easy to sit here and say, if this happens and this happens and this happens, everything goes really well, the market does well, and I can sell my business for X, that I'm going to be just fine. What we really have to plan for, and I think this comes from starting in the decade in the 2000s, where the S&P 500 averaged 2.1%. We had two crises. You really start to think we got to have a plan for when things don't work out. And so there's things people need to be doing, and having that coordinated team behind you is meaningful and important. And I think people miss that. They check the boxes, they have all the right professionals, but they don't have a cohesive team or plan.
Yeah, I think that's something that's important. I mean, I've written a book, The Right Team, The Right Plan. And it really talks about making sure that you pick your team of professionals, but you need to get out of the way and let them talk and be able to make sure that you do have the right plan for you. And let them talk to make sure that everything does stay cohesive, as you said. With our, we have a new administration in the government now, and it seems like a lot of people are scared right now of what again, scared of the unknown. What if you're talking with someone now about things and they're coming in and they're saying that they're scared because of this new administration? Kind of what advice do you have for them at this point?
Yeah, I think, Gary, you bring up a good point. And I was thinking about this over the weekend, just fear, right? And how often I have clients come in and say they're scared of, could be the new administration, or they're scared of the last administration, or they're scared of the war that's happening. They're scared of, the markets are up. So now we're due for a pullback, right? They're fearful of inflation. So much of what we do day to day is based off of people coming in and they are scared. Rarely do I have someone come in. I was thinking about this, probably never had someone come in and say, I'm really excited. I think everything is going really well in the world. And it's time to invest and let's go, right? Or it's the best time to retire. It's the best time to start a business or buy a house. There's always that fear, and there are always factors. If I have a great chart that we could look back from 1930 through today, and you'll see there's always a point in time where you can convince yourself now's not the right time. We're never going to feel just that peace that, okay, this is the right time to do X, but we still have to do it, right? We still have to plan for retirement. We may end up having to sell a business and retire when it's not the ideal time. We may have to send our children to school in the middle of the great financial crisis. And what do? It might not be the perfect time to liquidate the portfolio of savings that we have for them. And so what we do as advisors is really help you figure out where you are, and then how do we plan, not for the best case scenario, but how do we kind of get through, not if things get bad, but when things get bad. And I say that to clients constantly, from the way we construct your plan down to the way we construct your portfolio. We need to make sure that we're ready for when things get bad, because we never know when that's going to happen. I would say forget the current administration and let's just talk about the fact that the market's been up nicely, significantly the last 2 years. It would be normal to see some level of increased volatility and a bit of a pullback, and that would probably indicate a healthy market. But I've had multiple times a week that people come in and they're afraid. And my job is to really help them navigate those feelings, but still allow them to kind of take steps forward to get them where they need to be.
Now, can you talk on, a lot of the concern that I'm hearing from people right now are the increase in tariffs.
Mm-hmm.
Can you talk a little bit about, how that is going to affect our economy?
Yeah, absolutely. If you think about it, just, a tariff, if we're adding a 25% cost to any goods coming into this country, that gets passed on to the person who's purchasing the good. So it will make things more expensive. And if everything costs more, that in nature is inflationary. And so we can talk through, hey, the increased, funds that are coming into the country and how they could be utilized. But the reality is things will cost. And historically, tariffs when they're put in place, they actually don't really go away very quickly. You can look at the last time tariffs were put on by the current administration when they were in office. They stayed when the next administration came in. If we go back in time a few decades and decades ago, after the war, there were a lot of Germans eating chicken, and the chicken was coming from the US. And so what happened? Well, Germany and the European Union didn't like that. So they started to place a tariff on chickens coming from America. As a result, what happened? Well, people stopped eating chicken because it cost more. And so we weren't sending as much chicken into Germany. And to retaliate for that action, we ended up putting a tariff on German trucks. So as a result of that, if you look back in history, the sales of German trucks went down significantly. And the crazy thing is today, there's still a tax on chickens in US chickens in Germany. So it's, I don't know that it always drives the behavior we hope, but it is what it is, and it will have an inflationary impact, which again, I think goes back to the individual. You don't always know what will cause the issue, but what can we do? I always say focus on the controllables. You can control how much you spend. You can control how much you save. You can make sure you manage your debt level in a way that you're able to handle it, not just when things are really good and bonuses are coming in or sales in your business are phenomenal, but actually on a day-to-day basis when things aren't so great. And if you build your plan based on that, it's not great when you experience, a rising cost. That hurts, but at least you're able to sustain and weather through it. But most of those increased costs are going to be passed on to the consumer.
How do you help when your clients are calling in? Because again, everybody, fear drives a lot of things that people do, and lots of times fear makes people make mistakes, make decisions that typically that they wouldn't. I feel that as professional advisors, we're kind of always, and you have this psychology background, that we're always talking somebody off of a cliff. How do you deal with that piece of it? Because again, it's not just all financial, it's also that emotional side of things.
The emotional side of things is a huge piece of this, right? If we look at the average portfolio for the average investor left to their own devices, they're usually buying when things are high and selling when things are low, right? Because of that behavioral piece and because of fear. And so what we try to do is we spend a lot of time on the front end before someone even hires us, really getting to know them, what their past experiences have been with investing, what their cash flow needs are, what they're trying to accomplish, what really matters to them, get a good sense for their risk and their comfort with risk and volatility. And then once they hire us, we spend a lot of time constructing a plan, both, involving obviously just their, what they're saving, their estate planning, their taxes, but actually their investment strategy is critical and making sure that that's aligned with how they feel. But even if we get that right, when things happen, and last Monday morning when I came in, I had 3 people, concerned about the market and concerned about what was happening. And they all had different concerns. None of them were for the same reason. And so we talked through where they are, what their cash flow needs are. One was getting ready to retire. One was getting ready to send kids to school, and one was in retirement. So they're all different feelings, right? But we talk through, okay, here's where you are. Here's how you're invested. We've already taken some gains. If the market dropped 20%, here's likely what could happen in your portfolio. But most importantly, here's how we weather through. Here's how, if we still have a college tuition to pay for, regardless of what the market's doing, here's how I've got that cash flow and bonds coming due and cash made available so that we're never forced to sell what we have at risk in the market. So I always try to say we need that bomb shelter built into every portfolio so that we have staying power. And if we can give clients staying power, and it's not for 6 months, it's not for a year, we like to build portfolios where clients have 3 to 5 years or even longer, where the markets could be bad or something could happen where we don't see the level of growth and we don't want to be forced to sell what's down. And if you can construct your portfolio in a way where you're never going to have to sell things that are down in order to meet your day-to-day needs, you've got staying power. And when you walk clients through that exercise and they see the cash flow coming in and it equals what they need, and then they see the bonds coming due, which gives them a reserve and helps fund their emergency fund, they say, you know what, I get this. Actually, I'm fine. I'm comfortable with where we are. But it's spending time, not just having that conversation when they're nervous. Every time we get together for a review and we dig into their plan, we're going back and we're looking at, hey, yeah, it's been a great year. Your portfolio is up significantly. Your stocks were up 25%. Here's what's going to happen. Not if things go, come down or go bad or something happens, when something happens. And I think if you can train people to have that mindset, it ends up driving much better results over time.
If you were able to go back and talk to your 18-year-old self and knowing what you know now, what would you tell yourself?
Oh, what would I tell myself? I would say, just just probably believe in yourself, believe that you can, and think big and dream big, and just know that hard work and having discipline makes such a difference. I think when we're younger, we're so insecure about the future. And even back then, my history, my dad was a Guatemalan immigrant. He came over to this country in the 70s, escaping a negative political environment in Guatemala. And he gave me a tremendous opportunity. But I worked hard. He worked in a factory, and in college, I had 2 or 3 jobs all the time. And I just, I'm thankful for that opportunity that he gave me. But I would definitely tell myself, just know that anything's possible, especially here in America.
What in your professional career, what's the best piece of advice that anybody's ever given you?
What would you do if you knew you couldn't fail? Because I think so often before we get started, we've thought of all the reasons why this business isn't going to work, or there's this fear of failure that allows people to kind of think of all the reasons why not. And I think we need to consider the positive possibilities, always being mindful of the risks we're taking. But I think too often people, they don't consider the risks. They just almost become paralyzed, or they take on too much risk. You see extremes. But I'd say the majority of the population is stuck with the fear of failure. So I would say that was some of the best advice that someone gave me early in my career.
That's great. That's great. Melissa, we've covered a bunch of stuff. What have I not asked you wish I had?
I'd say that when it comes to, one of the things that's important for people, I think a lot of times sitting sort of in my seat, I, love what I do and I'm excited about it, but I think it's intimidating for people. So I think it's important. If you said to me, what do clients need to consider when they're interviewing professionals? I'd say they really need to have a comfort level that the person is really looking out for their best interests. And unfortunately, given what we do, and you and I have talked about this, a lot of times people that are sitting in my seat are trying to sell something. And if you go to someone and all they offer is insurance, or all they offer is this one portfolio, that's not really what you need. So I would hope that, people take a step back and really are mindful of finding someone that they trust, that they can look to, because it's really, really critical that they've got someone that they feel comfortable with leaning into, that's going to help connect all those pieces. Because I feel like people try to do the best with the information they have. And unfortunately, the industry doesn't always make it easy for people to navigate it. And so feel free to ask hard questions, push back, challenge your professionals, and make sure that they're looking out for your best interests.
I think that's extremely important. I think making sure that they talk to you at your level so you can understand what they're talking about is extremely important too. I think, we talked about this a little bit too, everybody talking in acronyms or talking over someone's head and things like that. And that there are a lot of, you say, bad professionals out there that do this. So then they almost intimidate you from asking questions. So then they don't have to spend all the time with you in going through stuff. And I think it's important that you do have your team of professionals that you understand and that you're not afraid to pick up the phone and call and ask these questions to make sure that you're not making the mistakes.
Absolutely. Well said.
Yeah. So, Melissa, if people like what they hear and they want to talk to you, how can they reach out to you? Where can they find you?
Yeah, they can call me, email me. I'm Soundview Wealth Advisors. We are based on Skidaway Island in Savannah, Georgia, but I work with clients all over the country and even some that live overseas. And so my direct number is 912-844-7563, or you could reach me at Melissa at S for sound, V for view, advice.com. And happy to help.
Great, Melissa. I really appreciate your time today and enjoyed our discussion.
Enjoyed it as well. Thank you so much, Gary.
Great. Hey, this week my guest was Melissa Bouchillon, and she is the managing partner of Soundview Wealth Advisors, and I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.